So can ServiceTitan follow in those footsteps? And is it, I mean, to put it crudely, is it a buy here? Let's ask Tim Seymour, the CIO of Seymour Asset Management and a fast money trader. Tim, I love this founding story. They started the company 12 years ago. Before heading off to Silicon Valley for programming jobs, the duo who founded it decided to work on a summer project together. Both of their dads were contractors, one in plumbing, the other in construction, and they figured they could cobble together some software to help them out before leaving. And here we are. Are you a buyer of this company now?
Well, it's an extraordinary story. Clearly, we know the fragmented and the monetization opportunities in that platform. The question is, what is the growth here? I mean, you had a great discussion on dynamics. What's kept companies from coming to market? Part of it is just the funding dynamics, and this is a very strong venture-backed company with some of the best venture investors in the world. There was this capital markets dynamic that required, or at least incented them to get to market here, et cetera, et cetera. I think it comes down to really the growth of these companies. And if you look at roughly 25% revenue growth, the question is, and you weigh that against the ARR multiple, in other words, what multiple of annual revenues are they trading at? These are the questions for investors here. And I think, you talked about what happened with some of the other IPOs this year, but Reddit is a great example where they gave third quarter numbers. Not only did they beat on the top and bottom line, but they upped their guide. And this is a company with 90% gross margins and is now growing probably well in excess of where the street thought they were, with a monetization gap, et cetera, et cetera. And that's why the shares have effectively doubled in a month. And I think that's what people are looking for. And I think with Titan, it's really a question about where are we going to be on the growth platform over the next couple of years. It's been somewhat sideways, and certainly on a revenue multiple, on a sales multiple, it's not cheap here.
So, and I'm reminded, Tim, if we go back over the past, we can zoom back even to maybe 2 years' time, the hyped IPOs have been, kind of underperformers, and the underhyped IPOs are the ones that have done. Even ARM Holdings, even Reddit was not overly hyped going into the IPO, really.
No, that's right. And I think you also have examples of like Pinterest and Snap, where it took 2 or 3 years until you actually saw that acceleration in the top line in the revenue model. So that's something I think the street is watching too. But the pent-up demand here, as has been discussed, and as we could talk for hours about, liquidity dynamics for markets are extraordinary. It's a great environment. There has been a backdrop. Banks are hungry. All we keep doing in terms of multiples, even the money center banks, let alone the investment banks and the boutiques, is pushing up the IB forecast for 2025 and beyond. So, look, I think there's more coming. I think this deal, which a lot of attention paid on down rounds and some of the capital markets dynamics, is part of it. But this is a company in a fantastic space. Are you getting the growth here to justify the multiple? And that's what it comes back to. A lot of these companies, there's tons of unicorns in the private markets that are probably staying there because they are so well funded. Another dynamic is, look at the private credit markets. Look how strong it's been. All we do is talk about the size of private credit. That's part of the story for some of these companies.